Hi everyone, it's Chad back with another video, and today I'm going to be talking about Pinterest. Fantastic business. There's one of my largest positions, and a stock that has kept me up at night many nights. I've held for a very long time, pretty much since IPO. So roughly, I'm about where I started, despite being at $90 at one point. I sold some of the highs, don't worry about that. But roughly, roller coaster of a ride, but roughly about where we started. Up from its 52-week low, so some money's definitely been made. 52-week lows, $16, 52-week highs at $51. This is a stock that is struggling. It's a $15 billion market cap, had a huge run up during 2020 when it benefited from a lot of growth pull forward, and in 2021, and it suffered with tough comparisons, with loss of users, and with struggling to work on its marketplace business. But I have a lot of faith in this business, and while my faith has faltered recently, I'm happy to report that I think this is a really good quarter. I want to dive into it, let you know what I think, and then have a see what you think in the comments below. Like and subscribe and during the videos, and let's get into it. The real thorn in Pinterest side, and arguably the bear case for this company, is that they weren't sustaining monthly active users. You can see year over year, monthly active users in the US and Canada is down 2%, but the important thing is they've righted the ship and they've added users quarter over quarter. They're looking at very tough comparisons from 2020 and 2021 when people were stuck inside and they used Pinterest a lot more, and they had a lot of growth pulled forward because of that. But thankfully they've righted the ship and added 3 million users in the USA and Canada, which is by far the most important market. You'll see in a minute the vast majority of the revenue comes from there because the average revenue per user is so high. The advertising costs are just higher than in Europe and the rest of the world, particularly over the rest of the world. So a loss of 2% year over year doesn't really matter because quarter over quarter it's up, and they've restored back to the levels they were in Q4 last year. Overall, 0% growth year over year, 1% increase in Europe, and a 1% increase in the rest of the world. But more importantly, they've stopped the trend of that quarter over quarter loss, and they're back to 445 million subscribers, actually an increase over last year by 1 million subscribers. Users, I mean, of course, not subscribers. Going on to the revenue side of things, this is again a big surprise. It's because their peers, for example, Alphabet released a stinker of a quarter yesterday, Meta is really struggling, Snapchat released an absolutely awful quarter, and Pinterest dropped in sympathy to that. And you can see here, revenue actually around expectations. It was up 8%, quarter over quarter decline in terms of percentage year over year, but still 8% global revenue growth, 9% in the USA and Canada, which is strong. A 4% loss in Europe, which is kind of to be expected because of the turmoil that's going on there at the minute with the war in Ukraine and things like that, and general real cost of living crisis, particularly in the likes of the UK. So people are just not that interested in shopping as much as they normally would be, and Pinterest is primarily used for shopping. 36% increase in the rest of the world. It just continues a really strong trend in revenue growth, and particularly average revenue per user growth in the rest of the world. And this is going to become a much larger part of the revenue of this business over time. But still, the majority is in the USA and Canada. That was up 9% year over year, which is really strong. My thesis overall for this business, and why I didn't sell when the user growth was declining, was because average revenue per user is the key metric that matters. Pinterest's advantage over other platforms is that it's just a more natural home for adverts, in my opinion. It's a more natural experience to see advertising on Pinterest than it is for Twitter, for example, when adverts are just popping up in your feed randomly. It's just less organic, it's more artificial. Whereas in Pinterest, you kind of go on there wanting something, and you see adverts for it, and it seems more natural. Global average revenue per user has steadily increased. Obviously, it's higher in Q4 due to the holiday season, but over time, if you exclude that, it's steadily increased to now $1.56. That's an 11% increase year over year. The USA and Canada is far, far higher than this because that is the most developed markets where advertising costs the most. You'll see that is a recurring theme in this report. 15% increase year over year, again really strong. $6.13 per user. This is getting towards the meta levels of monetization, and is far above the likes of Snapchat and Twitter. In Europe, the average monetization, they're still in the relatively early stage, and they did see a 3% decline. And additionally to the lack of the poor user growth and the reasonably poor revenue, this is mainly because of the average revenue per user. 38% increase in the rest of the world, which is pitiful numbers really, 0.11 cents in average revenue per user. However, this has been growing at a rapid rate and continues to grow rapidly. It was pretty much doubling last year. It continues to grow at a really strong rate. This is going to, in not so many years' time, going to become a really serious part of the business. Europe will bounce back, I'm sure, and then that will continue to grab more average revenue per user and move toward the USA and Canada. It's never going to surpass that in my opinion, but this could start to become a really serious part of the business. And if they can if they can push this global average revenue per user up to $2 or $3, then that'd be some serious growth for this business, and I can see that happening over the next 3 to 5 years. Obviously, I'm very happy with this quarter. Monthly active users up, which is but the real trend, and kind of got people off the Pinterest back, in my opinion. Revenue and average revenue per user were up and both surpassed broad analyst expectations. That's not to say it was a perfect quarter. One thing that does concern me is stock-based compensation. You can see on the bottom the previous quarter, which was $117 million of stock-based compensation, and the quarter that's just ended, $136 million of stock-based compensation. That's quite a worrying rise in my opinion. It's a very large expense for this company. And when you're doing just shy of $600 million in revenue in a quarter, spending a quarter of that on share-based compensation is a little worrying in my opinion. And this really needs to come down in the long term if they're going to record meaningful EBITDA, because this is really affecting them on a deeper level. They record adjusted EBITDA, which is normally reasonably impressive, and this is weighing really heavily on it. If Pinterest wants to be a profitable company over the long run, they either have to increase the revenue rapidly, which they're not looking like doing right now, or start to scale back the share-based compensation, which they also don't seem to be doing right now. So that is a little bit worrying. From a valuation perspective, the valuation has came down a lot because the stock is, we're in a completely different market environment. This was valued on a price to sales basis in the 20 region. You're now looking at a price to sales around 4.5. It records small amount of earnings, but you're looking at a 4p above 40 for a company that's growing revenue at 10%. That isn't fantastic. And a price free cash flow of around 22 as the previous quarter. This graphic needs updating. It hadn't updated yet. I believe this will be much higher. So I can't really endorse this right now because it's trading at such a high premium to the S&P 500. Forward PE of 45 or so is far higher than the S&P 500 forward PE of around 15. That's not to say it doesn't deserve some premium. It's growing at 10% plus. It's righted its wrongs, and it has 80% gross margin nearly, but it's just not converting that meaningfully to operating in net margin. And while I believe there's a lot of growth potential behind Pinterest, and I believe this could get back to its highs in the not so distant future, I just can't really be adding so much to it right now because the valuation is so high. We're in such a volatile market, in such a difficult environment, in an inflationary market. I couldn't justify adding much more to this stock as it is one of my larger positions at this sort of price. And that really is the bottom line for me. I'm impressed by the direction Pinterest moving in. The change in management seems to have done well. They've bounced back with monthly active users, which is so important just from getting the analyst off the back perspective. The stock has responded well, up 10% after hours. I think it'll probably go a bit lower tomorrow because of the disaster of Amazon's earnings and things like that, the wider market reaction to that. But overall, I think this is a really strong quarter. They really need to chain a few of these together. This stock is objectively expensive. I really like it, but for me, it's firmly a hold right now. I'm not willing to add much more because while I believe in the long term this is going to be a much larger company, right now in the inflation environment we're in, I think there's better places for extra money considering the size of this position for me. Of course, that's just my opinion. You let me know yours in the comments down below. Let me know if you think this is a stinker that's going to zero, or if you think it's going to $100, $200, wherever you think. Let me know in the comments down below. Like and subscribe and enjoy the video. I'll see you again next time.